of stuff on the computer and the surgery takes it's quite slow. Anyway, good morning again. Well, let's kick off. Today is Thursday, the 5th of May. Going to Thursday. Here we are. So Thursday, the 5th of May, we're looking for reports of high importance coming out that could affect the market we're looking at, which is the Euro-US dollar. So we see here the Bank of England rate decision is going to be announced at 11 o'clock GMT time, which is 12 midday UK time. So at 12 midday, we're having the Bank of England rate decision, which is a report of obviously very high importance. That might have an impact on the Euro-US dollar, but it will certainly have an impact on the pound dollar. Then at 11:45, which is 12:45, we have the European Central Bank rate decision, which will obviously have a huge impact on the Euro-US dollar. So we're not going to meet at 12. We're going to meet at 12:40. So we're just going to meet just before that report comes out. I sent you all out a webinar invitation last night. So if you check your emails and check your spam boxes after the webinar, you should have the webinar invitation. If it's not there, you can just send me an email and I can resend it. So we're not meeting at 12. We'll meet at 12:40, just before the report comes out. And let's see, and there are no more reports of importance after that. So that's the last report of high importance at 12:45. So as we know, the market tends to trend sideways prior to reports of high importance. And like I said, according to my own trading plan, I place one trade prior to the report coming out. If the trade is successful, fine, I stop trading for the day. If the trade is unsuccessful prior to that last report of high importance, then I stop trading and I don't place any more trades till after the report comes out. So we start with the 1-year daily chart. As we already know very well that it's an extremely bullish market. It's been uptrending for a long while. This is the 1-year daily chart. Let's put it to 1-year daily. And we can see that it's a very bullish market, uptrending, but there are no clear swing trading opportunities. Let's go to the 2 days, 5 minutes. So that's the 2 days, 5 minutes. So as we can see, we start from yesterday. The market has been going down in a very haphazard manner. So you can see there was a sharp drop yesterday and went back up, came back down, went sideways, dropped a bit, it's gone up, it's broken the pivot point, and it's now going up. So in terms of what to do now, I mean, one option you had was, to obviously, this is, again, when you finish, at the end of this 2 weeks trading, you have to decide when you start trading and what time you trade. Like I said before, we only meet at 6:40 out of convenience, just so it's convenient for most people, but it doesn't mean you start trading at 6:45 because the market can move anytime from midnight. From 9 p.m. to midnight, there's no point trading because the market tends to trend sideways between 9 p.m. and midnight. But from midnight, you can start trading, but it's all up to you depending on your time schedule, your plan, and what you normally do. So I just wanted to highlight that fact. So, but you just decide what times you start trading, what time you regularly trade. But like I say, yes, it'd be difficult for us to meet at midnight and at 5 o'clock in the morning. Okay, so well, you can see here the market, you could have bought above the pivot point if you're trading after midnight. like I was. But like I say, if you didn't buy just above the pivot point in the early hours of the morning, and you don't have a trade now, then we can now see that it's a quite with the market the way it's trending around the pivot point now. I'll be quite reluctant to put a buy order at the first resistance now because it's quite far away, and the likelihood is that if the market does get that far before the report comes out, there's a chance it might start to go sideways at that point. And again, this is where you just have to look at the market. You have to look at the market, taking into consideration the fact, look, there's a report coming out at 12:45. Interest rates, which is a huge report, that can have a huge impact on the market. You already know it's risky trading prior to the report coming out anyway. So you have to judge each trading position you have and decide whether it's a good idea or not. Like I said, trying to place a pending buy order that far away now, yes, there's a chance the market can go up, but the likelihood that, in view of one, you can see the previous high is just above the first resistance. There's a report coming out, so there's a chance that the market can get there, take your order, and just start going sideways and take you out. So that's too risky. So we wouldn't do that. The moving average 50 has crossed above the pivot point. So technically you can put a sell order just below the pivot point at 14,846. But again, you have to assess that and think to yourself, is that a good idea? Again, if you look at the big picture, if you put your sell order there, there's a chance again the market could come down, take your sell order, and you get caught up in a sideways trend. We're not sure if this market is beginning to trend, if this market is beginning to trend sideways. It's difficult to tell. So you might get caught up in a sideways trend there. So again, that too looks like a high risk trade. So again, we ignore that. We can say we'll come down to the first support to sell just below the first support at 14,754. But again, that is too far away from the market at this present time. And likely that if the market does fall that far before the report comes out, there's a likelihood it might start going sideways at that point. So again, we don't want to do that. You could use the moving average 50 and say you're going to sell just below the moving average 50. But again, with the report due out at 12:45, I'm always reluctant to use the moving average 50 as the entry point in the market prior to reports of high importance coming out. After the report has been announced, I'm happy to use the moving average 50, but not before the report is announced. So that too I wouldn't use. So, that's the way you have to look at the market, and then just decide for yourself, whether that's a risky trade or not. Now let's see, another thing you could do is you can look at the market here and say, look, it's been going up, it's made a high here. The high there is 14,874.1, that's the high there, 14,874.1. So that's the recent high. Now, once the market has made that high, you want to look back to the most recent history and see if there's been a previous high like that. And you can see there was a previous high at about 4:35 yesterday afternoon. So you can see that high there is 14,873.5. So it's just 0.5 of a difference. And like I say, if it's plus or minus 2 within each other, then you could say the market has formed a resistance there, because it's formed a high there of 14,873.5, and it's now from the high of 14,874. So that could be a good point to say that's a resistance in the market. Then again, if you look at the bottom here, the market has formed a low there. The low is 14,808, and it's formed another low there of 14,807. So you can see it's just 1 point difference. So again, you can see that market has formed a support there, or you can either call it a support, some people call it a double bottom, and this is what they call double bottoming. You know, the market comes here, forms a bottom, goes back up, forms another bottom, and it's gone up. So it's formed a double bottom. Usually that's a signal that the market is about to go up when it forms a double bottom. But again, some people talk about double tops. When the market forms a high here, comes up, forms another high. So again, it could be a signal the market is going to fall. But again, it depends on which way you look at it. Because you could say, I like to look at it as support and resistance levels. That yes, the market has got to that high point, came back down, got to that high point again, and came back down. So it looks like it's resistant going beyond that point. So chances are if it does go beyond that point, there's a high chance that it will keep going up. Same on the bottom. It's come from the low here. It's gone back up, formed another low. So it looks like the market is resistant going beyond that low point. So again, if the market breaks that support, likelihood that it's going to keep falling down. Again, you use the word likelihood. Always remember there are no guarantees. You never say always or never in the market. You don't use always or never. So you don't say if the market forms a resistance, if it breaks it, it will always go up. Or if it breaks the support, it will always go down. No. Again, I will never tire of saying that. You know, you're never going to get it 100% right all the time. There's no software. You can buy trading softwares. You can change your plan. You can do what you like. You're never going to get it right 100% of the time. And that's why you always trade with stop losses, because despite your best analysis, the market can still go against you. So that's why you need to cut your losses. And that's why you shouldn't overtrade. And that's why you should apply good money management and trade appropriate to your capital, because you will never get it right all the time. You know, I'll keep repeating it and repeating it, because that's the only way you can enjoy trading once you accept the fact that you are going to have losses. So, having said what I've just said, so in view of the fact the market has formed a resistance there, and it's formed a support there, then yes, now what we could say is that we could place a pending sell order just below the support of the market to sell at 14,805 if it breaks that support, and to buy just above the resistance at 14,876 if it breaks the resistance of the market. So I think, again, that's the beauty of doing this 2-week session, because every day you have to look at the market in a different way, because the market throws up a different scenario and a different way you have to look at the market. So yes, although you have a trading plan and you have your indicators you use, you have to have a systematic way you look at the market and try and judge where would be appropriate to put your trade, your pending orders. So, like I said, what we're going to do now, we're going to place a pending buy order at 14,876, 2 points above the resistance of the market. So we're going to buy at 14,876, and a pending sell order just below the support of the market at 14,805. So those would be our pending orders. Remember, and again, once you finish this 2 weeks, you can decide whether you want to trade at all before a report of high importance, or whether you want to follow my plan of placing at least one trade just before the report comes out. I always do that. I place one trade before the report comes out, and if it's unsuccessful, then I stop trading. But again, this is how you can look at the market and then judge for yourself where is the best place to place my order. If the market hadn't formed a resistance here, I want to place an order there. If the market hadn't formed a support, I want to place an order there. So in fact, if the market hadn't formed a resistance or support, then I want to place any pending orders at all. But like I say, yeah, if you're up early hours in the morning, like I was, you could have placed a buy order just above the pivot point, which is what I did. Again, like I said, you don't have to, when you start trading on your own, you decide when you start trading, what time you start trading. But, you know, that's the trade I placed just above the pivot point, 14.850. Okay. So, again, I'll just recap. I hope you all remember to place a pending buy order at 14.876. Again, there's no guarantee you're going to make money on that. But that's, you know, we've analyzed the market. We've made a reasonable choice. And like I said, the whole aim of trading is just to have confidence in your plan and pull the trigger. You know, it's not going to be right all the time, but again, you're trying to combat fear and greed. You know, fear will freeze you and you'll be scared to take your trades. Obviously, greed is that you start over trading, you know, trading inappropriate contract sizes and all that. So again, you don't want to do that. And those are two difficult emotions to keep a check on. You know, you want to be in a position whereby you assess the market, look at it from a logical point of view, decide where you want to place your pending trades, and then go for it. And then if you lose, you lose. You know, you're always going to have losses. But like I said, you know, make sure that whatever trade you place, just make sure it's well thought out. So like I said, just to recap, if you are up early hours of the morning, you could have bought, you could have bought just above the pivot point, like I did at 14.850. If you didn't do that, which I'm sure most of you didn't, and you just in this morning, then again you look at the chart and then look critically as to where is a nice place to put my order. Now I won't get into trouble. So you can say yes, I can put a sell order just below the pivot point. Then you look at your order and think, is that risky? Is that safe? Looking at the market and looking at, you know, the potential that if by the time it falls back down, you might be going in a sideways trend. So you look at that and say to yourself, no, that's too risky. I don't want to do that. Again, you know that it's a report coming out at 12:45, so that is extremely risky. So nope, I'm not going to put my order there. You can say I could just sell just below the moving average 50. Again, you know, report is coming out. That's very risky. So you say, nope, I won't do that. You can say, okay, let me go to just above the first resistance. You say to yourself, you know, there's a report coming out at 12:45. Even if the market trends and gets that far, it might just take a break, stop trending at that point and start to go sideways, and you might then get caught up in there. So nope, I won't place a pending order there. You could then say, okay, let me place a sell order just below the first support. Again, you say, look, by the time the market falls, if the market does fall that far before the report and gets to my order, there's a likelihood it's going to go sideways. So again, you say to yourself, that's too risky. So you don't. So that's why we're not using any of those points at this point in time. But luckily, we've got a situation whereby the market has formed a high there. It's come back down. It's formed a high there again. It's come back down. You can see it's gone up there again. It's gotten close to that high point again, and it's come back down. So you can see that the market has formed a resistance there. It's also formed a support there. So yes, that now we can use, because we say if the market breaks the resistance of the market, we'll be happy to buy. And if it breaks the support, we're happy to sell. And that's how we've come up with this plan so far. And then we'll see what happens. Any questions on today's plan? If you have any questions, you can either click the hand button or send the question through the question box. So I could just say, just to remind you that we're not meeting at 12. We'll be meeting at 12:45. Sorry, 12:40. 12:40. So like I say, the emails went out after midnight yesterday. Okay, so if there are no questions, and then I will bid you guys a good morning. Sorry, the audio, yes, the audio went up for a short while. I think it keeps playing up on the computer here in the surgery. Anyway, that's it for this morning. Sorry about the sound going off temporarily. Okay, so like I said, there are no questions. Just unmute you all, and you can have a nice breakfast.
You too.
Yeah, full English breakfast. Anyway.